Let's quickly move on now. We have, of course, the management of Tata Tech joining in. The company has had a slightly weak quarter. Just to quickly recap the numbers, the revenue top line is down 4.6% quarter on quarter, and margins have also compressed slightly to about 13.6%. So we have Mr. Harris joining in to tell us whether this is just a one-off. Mr. Harris, great to have you on. That's exactly, I think, what you've indicated to analysts in the call, that this was because of some delays in certain deals, certain ramp-ups. But you're sounding confident about the rest of the year. What makes you feel this way?
Yeah, we continue to be bullish about the full fiscal year. I think the first quarter we entered with a great deal of optimism, but the tariff announcements early in April, I think, interjected an element of uncertainty, and many of the customers that we've been engaging with that were looking to make investments in new products basically paused and delayed some of those decisions. Now, the good news for us is that towards the end of the quarter, we saw some of those decisions get converted, and so we're taking a strong order book into the second quarter. And again, we continue to be confident about the prospects for growth throughout the rest of the fiscal.
So does that mean what, double-digit growth in FY26? Early teens, single digit, some indication?
I think we'll calibrate our expectations as we move through Q2. The North Star for us continues to be double-digit growth. We'll work hard to endeavor to achieve that. But I think a lot of it will depend upon the trade negotiations that are currently going on between the US and various trading partners. And I think if those things resolve quickly, then I think we can be confident about getting close to that. But we'll see over the next 3 to 4 months, and then in the sort of September-October timeframe, I think we'll have a better view.
Warren, hi, morning. The JLR, can you talk to us about the JLR account? How's that doing? Has that stabilized?
Sure. We have, we've been very excited about the performance and the progress that JLR have made, not just in the recent past, but in the last 4 to 5 years. They celebrated being debt-free at the end of the last fiscal year. I think that's informed some confidence in terms of their investment in new product. There is a lot of launches that we are supporting this year. And so we're confident in the JLR story and our ability to contribute towards that. And we're also very confident about the position that Tata Motors finds themselves in. I know that there are some tactical headwinds that they're navigating through, but the company has executed extremely well in terms of its transition to EVs. And I think the investments that they've made position Tata Motors not just for success in the short term, but also in the medium to long term.
Hi, Warren. Good to see you. Ben, a quick question on growth first. Couple of quarters of negative growth. Do you think that Q2 onwards, we get back to growing base? Point number one. And point number two, I've been looking at a couple of brokerages. The bearish ones are talking about a degrowth this year. You're ruling out that possibility?
Yeah, I'm very, very confident that we will not degrow, and certainly Q2 will be better than Q1. We will grow and we will improve our profitability position. And I'm very confident, again, given the order book that we've got, that we're going to have a very strong second half to the year. So,
all right.
Again, we'll calibrate exactly what that means as we move through the second quarter. But certainly, I have no doubt that we will grow this year.
All right. Endeavors to go to double-digit growth, but no doubt about growing this year. And Q2 will look far better. You briefly mentioned on profitability. I was just noticing your margins. It's come to around that 16.5 odd handle. Earlier, you were doing 18% odd. For the year on the whole, what should the margin trajectory be?
Well, one of the things that we made a decision on in the first quarter is to protect the capacity to deliver the order book that we worked hard to build for ourselves. So that's had an impact on margins tactically, but we certainly expect as growth flows through, that margins will improve as well. So, again, we're confident that we've interjected discipline and operational rigor into how we're running the business, and we are very, very confident that we will trend towards 18% this year, and our North Star is 20%, and certainly as we look to build momentum this year, that will be the plan that we look to affect over the next couple of years.
Okay, 18% this year, and North Star is 20%. Warren, you said that EU is looking better as compared to the US market, which has been hit by tariffs, etc., just over the weekend. And that's how fast-changing this is. I mean, the US is threatening 30% tariffs on EU. I mean, so suddenly in the last 3-4 days, I'm sure CEOs, etc., would be taking note. And it kind of sort of, again, disrupts things. 30% is significantly higher if it goes through than what many were assuming earlier. So, how confident are you that, what you say now will kind of sort of, hold as you go forward? Because many of these things are not business-related per se.
Yeah. I think our confidence is informed by the engagement and the discussions that we're having with our customers. Clearly the threat of 30% and with some jurisdictions higher tariffs, I think that's not helpful. But I think there is confidence that common sense will prevail. That there is a view that some of these threats are negotiating tactics, and again our customers are increasingly confident that the uncertainty that prevails at the moment will be short term. And I think if that can be realized, we're in a very good position to really kick on from where we are at the moment. Our business is exclusively focused on the manufacturing sector. The manufacturing sector, and specifically the automotive industry, is product driven. And I think over the last 12 months, given the election uncertainty in the US, given the runoff of incentives in the EU, a lot of our customers have stalled investment in new product, and so there's a lot of latent demand that is out there. And again, we are very, very confident we're going to be able to intersect with that.
Mr. Harris, just sort of to understand this, you mentioned that you're confident of retaining full-year margins at around 18%, with 20% being the North Star. So the 200 basis points dip in margins that we saw in the first quarter, was it entirely because of certain deal ramp-ups not happening, certain delays? And I'm just trying to understand if there's any change in pricing. And also just let us know what your thoughts are on wage hikes, because a lot of the larger IT services companies, they've not yet committed to wage hikes. What about you?
Well, let me just qualify that I expect to get back to a run rate of 18% as we progress towards the end of the year. Whether or not we'll be able at a consolidated full year level to get back to 18% will very much depend upon how the next three months goes. But we are very, very confident that the headwinds that we are grappling with at the moment are short term and are driven by the macroeconomic uncertainty. As far as wage hikes are concerned, we've not yet made a decision. We will be evaluating over the next couple of months what it is that we will need to do, and we'll make a decision likely in the September timeframe in terms of what will be appropriate for us to reward the teams that are working diligently to deliver value to our customers.
So basically, by the end of this year, you're hoping that margins will be at 18%, though on a full year basis, FY26. We'll have to see, right?
But we will have to see. Our commitment and the business plan that we're working to is margin preservation. But I'm certainly very, very confident that by the end of the year, we will be back to a run rate that will be consistent with what we've delivered over the last 3 years.
Well, good luck to you with those plans, and good luck to your team as well. Thank you very much for joining in and giving us some perspective on the business. Well, that's Tata Technologies sounding quite confident for the rest of the year, though the first quarter has been a bit of a bumpy start for them.